Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and this is where we discuss everything about the stock markets, closing action. Also, I'll help you understand how the trade really panned out today, where were the gains and losses seen, and also which were the sectors and stocks in focus. So, over the next 4 to 5 minutes, do stay tuned onto with me. Let's start off first with the markets closing action to see where the benchmarks closed today. Well, after a day's breather, the markets managed to end in the green, and this is despite the hawkish commentary by Jerome Powell. Fed chair actually mentioned overnight that they are strongly committed towards containing inflation. That means that if it is not ruled out, aggressive rate hikes will be there. However, he also mentioned that if there are too soon rate hikes happening, there is no ruling out a recession in the US. Despite that, we actually saw the markets turn green today. The Sensex ending with 0.8% of a sharp up move, 52,265. Nifty 50 also moving higher by almost 1%. It managed to close back above 15,500 mark, 143 points of gains coming in there. The Nifty Bank also up by 0.8%. The Midcap Index up by 1.2% too. All of these factors definitely impacted the markets in today's trading session. Also, when you talk about which were the sectors that were in focus, the auto stocks continued to shine very, very sharply, 4% gains, while capital goods and IT, also pharma and realty indices were up by 1% each. The Indian rupee we saw ending marginally higher at 78.3 per dollar. The indices we know that they actually went up in the positive. The mid cap and the small cap indices also gaining in tow in today's trading session. We also saw some of the biggest gainers from the large cap space, like Maruti Suzuki jumped up over 6% today, 488 rupees of a change on the upside. 8,271 rupees is what we saw Maruti coming in at. Also, on the other hand, biggest loser was Reliance Industries today. That slipped by 1.6% to close the day at 2464 in today's trading session. Now, what do the experts really make of the session today? Sahej Agarwal, who's the head of research at derivatives in Kotak Securities, believes that the Nifty trend still remains quite weak, with the resistance placed at 15,870. Unless the same is crossed, he expects weakness to actually continue. However, short-term volatility will also be continuously high. Broadly, he expects pressure to continue, while limited stock-specific risk-defiable opportunities will still be available for all the investors. He also believes that select auto, banking, and mid-cap energy stocks look attractive from the real risk perspective at this point in time. He also expects continuous selling pressure to continue in the metals pack. Gaurav Ratnaparkhi, who is the head of technical research at Share Khan and BNP Paribas, did say that on the downside, 15,400 is the near-term support for the Nifty, while on the upside, 15,700. If that gets taken out, there could be some positive zone in which the Nifty could actually continue to be a part of. Also, Vinod Nair, who is the head of research at Geojit Financial Services, did say that slowing economy, hawkish monetary commentary have been factored in now by the markets. However, FIIs are continuously selling. That is why we are seeing pressure on the markets and a limited upside from the current levels as well. Well, that's as far as the market wrap is concerned for the day. I'll keep you posted with everything that's developing on the business front and stock markets front. And for that, you need to stay tuned onto Business Today TV.